this idea of like being owed something. It's like you're not owed anything.
No,
What
Bitcoin doesn't
what
owe
do you
people a
mean by that?
retirement. What I mean is that, like, a lot of people thought that if they bought Bitcoin, I'm not going to mention any particular people, but there have been some people in our community that have become demoralized because things have, in many cases, they were extremely bullish on Bitcoin, but then things didn't sort of materialize within the time frames that they thought it would. And they had made certain plans, such as retiring. They thought that if I've held this long, surely Bitcoin should be $1 million by now, or certainly higher than the $89,000 or something it is at the moment. The thing is, though, that like Bitcoin doesn't owe you a retirement to your timing. You might have timed it expecting that Bitcoin was going to be at a certain price in a certain year. And when that doesn't eventuate, then somehow you want to sort of feel as though Bitcoin is this sort of nebulous thing, owes you that. But it just doesn't. It will happen one day, but it won't necessarily be to your timing. And so don't give up the day job. Keep your other sources, some other source of, certainly if you haven't got anywhere near a retirement level of Bitcoin, don't expect that it's going to become that like at a time that necessarily suits you. It one day may well do, but in the meantime, don't make plans to retire or give up the day job and that sort of thing. Keep your alternative sources of income going. And if you are already there, congratulations. You're probably one of those people that doesn't feel as though they have to look at the price anymore, because it doesn't, like, I guess if you've got thousands of Bitcoin, then maybe the price probably genuinely doesn't matter. Once you've got a certain amount of Bitcoin, the price probably really doesn't genuinely matter to you, because it's really like, no matter what you spend, it's not putting a meaningful dent in your stack. But for others who've only got a handful of Bitcoin, if less than 10 Bitcoin or something, then it does. Like, the price may well matter, because the spending decisions they make are going to put a bigger or smaller dent in their stack depending on what the current price is. But don't expect Bitcoin to sort of move to the price that you'd expect it to be to retire at the timing of your choice. If it happens and when it happens, great, congratulations. But you just may want to hold off until it does.
Yeah, it's good advice. And it almost harks back to what you were touching on for the 2013-14 experience, was like, just don't put more in than you can afford to lose. And that remains, like, I think, an important point of view. It's like, if you can't handle the short-term volatility, like if you can't handle the 80% drawdown, you've got potentially a big problem here, because I wouldn't freak out.
Yeah, I wouldn't. Just to be clear, I wouldn't put it anymore. I wouldn't use that line anymore. Don't put it any more than you can afford to lose. I'm actually more of the view now is in terms of Bitcoin is, don't keep in fiat any more than you can afford to lose, because with fiat you're guaranteed to lose your purchasing power.
And I agree with you on this one.
I don't think it's a realistic prospect anymore, like it was back in 2013 and 14, that Bitcoin could just dribble off and become zero. I don't think that's a realistic prospect anymore. Drawbacks, however, are a realistic possibility, but as long as you're not in a leveraged position,
it doesn't matter.
It will return. So therefore, you can in fact put all of your available money, as long as you've got enough to get you through, like as long as you're able to pay your other immediate expenses. You don't want this to sort of put you, like, if there is a drawdown, to put you on the street. You should be able to weather that dip, and in fact, those dips will be for you a gift. Because now the money that you're earning, remember that I've said before that don't think about retiring yet, so you're still earning. That will now allow you the savings that you're able to accrue from work will now allow you to obtain a greater percentage of the whole. Remember that ultimately the Bitcoin is finite. And no one can change that. No one can increase the 21 million supply of Bitcoin. So should the price go down and you're still working and you're not living off of your Bitcoin yet, you're still adding to your stack, then price drops are actually beneficial to you, because they now enable you to obtain a greater percentage of the finite whole than you otherwise would have done. And that was the key for me as well back in sort of 2014. I mean, like, it was obviously very, it wasn't pleasant at the time having to weather that drop from getting in at the very top of that bull market, starting there and having to sort of essentially look as though I was sort of wrong on it. But it did provide a great benefit to actually stack more Bitcoin at a far more reasonable price and therefore obtain a greater percentage of the finite whole than I ever would have done had it just continued on its straight line upward trajectory from that 2013 bubble.
It's such a good point. And you never know when that might happen as well, because I felt a similar experience. I first bought Bitcoin in 2015, but it wasn't until 2020 that I started looking at it as a genuine kind of investment allocation within a portfolio. I owned a little bit. It was something I played around with, but then suddenly like, hang on a second, we've got a stock listed company buying this thing instead of US dollars for a treasury reserve. That's a big deal. Let's look at it much more closely. And that was, in I went. In 2022, the back end of 2022, there was all this shenanigans that had been going on with these yield platforms. Celsius blew up, BlockFi blew up, and FTX, Sam Bankman Fraud, as he's now kind of jokingly known as, right?
Scam banks to fraud, yeah.
Yeah, who was literally stealing people's money and buying his own token. You couldn't make it up, right? A bunch of American kids sitting in Barbados or wherever they were, high on
well, the funny thing
drugs,
is many Bitcoiners kind of actually did. they did see that coming.
Well, they did, yes, absolutely. Yeah. It's amusing. But the point I'm trying to get to here is that the price, it fell all the way down to like 15,000 US or something. And I think one of the reasons it was able to do that was because there was so much paper Bitcoin sold that didn't realize it was the case, and they were sitting on exchanges and they'd bought a derivative of this thing. But also there was the Chinese mining ban that put a real like headwind on that particular bull run. And so 100K US has only arrived in 2024. But every Tom, Dick, and Harry that had a bloody Substack or Twitter feed in 2020 was saying Bitcoin's going to 100K.
Yeah.
And it never did. And then the bear market was brutal. All the way back down to sub 20K.
Well, they've all been
whatever it was.
They've all been brutal. 2014
in their own way, right?
Yeah, they've all been. Yeah.
And so that's the fun part. If you're lucky, even if you hit that high of the previous cycle, if you're like, I need more of this stuff, it makes so much sense. Actually, you end up accruing an average cost of coin in a better sense.
It's the bear. That's right. It's the bear market
where the hodler really makes their coin.
Exactly. That's where you make. Exactly. There's a difference between the Bitcoiner that makes it and that doesn't. Is what you do in that bear market. Do you get demoralized and not buy anymore? Do you sell, or do you double down?
You double down.
It takes a certain degree of perhaps bloody-mindedness sometimes to take that doubling down approach, because you really do have to believe.
You either don't.
Conviction, yeah.
Do you believe yes or no?
You really do have to believe that more, like the market is. It's like that Principal Skinner meme. No, it's the market that's wrong. And you really have to be that character.
Yeah.
And not only against like the price action that's occurring, but against very much what you then see. You got to deal with. You got to watch. This means nothing to you if you're no longer inculcated by the mainstream media. But those that still pay any attention to it. You got to see that news coming out. Bitcoin's crash. Bitcoin's this. Bitcoin was all of that bearish news that comes out. Or
you get your mate texting you, like, you didn't own that stuff still.
Because all these people come out just ready to jump on Bitcoin's grave again. But again, you just get inured to it after a certain period of time. I say to people, if this is your first bear markets, no matter how bad other bear markets might be, for you, it's the first bear market you go through is always the worst one, because that's the one where you might personally be underwater. But every other bear market, hey, I've been through it before, and we saw what happened then, and we know that it turns around and comes good, because inevitably every single thing that has ever precipitated a pullback, like a big pullback in Bitcoin, has never really been anything to do with Bitcoin. That's always been the funny thing. Like in 2013, Mt. Gox was considered to be the thing that precipitated the collapse in the price of Bitcoin down to from like $1,200 down to about $200 US. But what did Mt. Gox have to do with Mt. Gox wasn't Bitcoin. Mt. Gox was just some very poorly run exchange run by an incompetent boob that happened to be trading Bitcoin. It wasn't Bitcoin itself, but too many people conflated it with it.
It was human error, corruption, greed, all the characteristics
of that.
We've humanity.
Seen it. And that wasn't even the first time a Bitcoin exchange had failed. There'd been many other Bitcoin exchange failures. because of course, any Bitcoin on an exchange is putting the worst aspects of the fiat financial system back into the equation. All the very things that Bitcoin was designed to remove. Bitcoin was designed to remove the need for trust from the system. It means that trust was neither requested nor required from any of the participants in the network. But when you're dealing with an exchange, at the very least temporarily, you do have to put that back in there. And of course, people, particularly if they're trading the Bitcoin, would leave all of the coins on the exchange. And of course, that's nothing more than an IOU. And they're the first people that are the unsecured creditors when these exchanges go down. So that had nothing to do with Bitcoin, though. And those of us that understood this realized, hey, this is meaning I can kind of get a bargain on this thing. I can get this thing for sort of, this is mispriced on the rest of the market who think that this thing does have something to do with Bitcoin, because that's what you'd see in the media. You'd read this stuff in the media, and it was just so wrong. I mean, and it still is to this day. It's almost sometimes infuriating when you realize these people that put themselves forward as journals of record, or as of informers of the people, authoritative documenters of what's true and what isn't. Those sorts of people with their fact checking and all of that sort of thing. These very people, and then you read, and it's so catastrophically wrong what they're saying from anyone who's even done the most basic research on Bitcoin. But unfortunately, those are the people that too many other people who don't know that much about Bitcoin are listening to. They're not listening to the same people you and I have listened to. They don't listen to these sorts of podcasts. They don't listen to the many great people that have spread knowledge about Bitcoin in the past, particularly those names I mentioned that influenced me very early on in my Bitcoin journey. They don't know about any of those guys. And so, we've got to be watching infuriated as this ridiculous nonsense goes out about Bitcoin. But in the meanwhile, though, it pushes the price down and lets those of us who do know better acquire more than we otherwise might have got.
And it's that, as an investor, price and value are two very, very different things.
Yeah.
So if I was to distill what's happening today, like we're having the sharpest sell-off in this current bull run. Is it the end of the bull run? I personally think it's very, very unlikely that that's the case. And therefore, actually, you can be buying Bitcoin at 10% of the cost from a week ago. So if you can buy the same thing, but for 10% cheaper, why aren't you buying more? And,
well, that's right.
People they misunderstand that. It's like the price is coming off. It must have got worse. It's like, well, no. And it's like, why are you buying it? And, it's essentially lunatics like ourselves that would quite happily see the price come down by 80% and add to our positions that make this whole idea that Bitcoin is going to zero completely insane.
Well, it's funny. You get those very same people who'll say, oh, that market looks a bit toppy at the moment. Hey, that's gone up a lot. Oh, that's a bit too high. That looks like that's the top.
It's not
the
right
market.
time to buy. Yeah.
It's not the right. That looks too high. It's gone too. I'll wait till it drops. And of course, the moment it drops, they say, "Oh, gee, wasn't I smart? I'm glad I didn't buy any of that. Oh, I'm glad I stayed out of that shit." Well, yeah, I'm not buying that. That's going down. Oh, yeah.
And they're the same people when Bitcoin's at $1 million. They'll all be like, "You got lucky."
You got lucky. Yeah. And again, they'll still predict, that's going to crash, and it'll crash. What'll it crash down to from $1 million?
500 or so.
500. Meanwhile, they didn't buy it at 80.